Hey, this is Rob Anspach. Welcome to another edition of eHeroes. Today, I'm bringing, I think one of the experts in lending. His name's Ed Parcaut. Did I pronounce that right?
It's Parcaut, but no one's ever gotten it right my whole life, so it doesn't really matter. You have to go with the French pronunciation. People never get it right.
Yeah,
So.
because you look at it and thinking, no, I'm not even going to attempt it. But it's people mess up my name all the time, so I kind of get used to it. But
Same here.
we're in this crisis, is what they call it, pandemic, in the middle of what I call cluster. I can't
Yeah, I
even
know.
say it on the air, but it's really taken havoc on the lending. And you know, just a few seconds before we got on here, you were mentioning all these things that are no longer available now. Which when you look at the whole industry, you're thinking, okay, what's next? What's going to happen? Is my mortgage going to be protected? Can I get a loan? Can I do all this stuff? And it's completely kind of up in the air now.
Yeah, we were talking about how, like, within 3 weeks ago, within one day, construction loans were gone, um, jumbo loans were gone, and then also, just anything that was alternative than our normal. Like we could do self-employed bank statement loans. All that stuff was gone in one day. And a lot of people are thinking, well, rates are historically low right now. That means everybody should be refinancing. Everybody should that. And yes, you should. But the problem we run into is it has to do with servicing rights right now. I don't know how far you want me to get into this, but basically, because every governor and everybody has said, hey, go ahead and call up your lender and get a forbearance, right? They don't understand forbearance does not equal forgiveness, right? Keywords: forbearance, deferment. Deferment means you put it on the end of your loan. Forbearance means you don't make a payment for 3 months, and then on the fourth month, you got to pay all that up.
Yeah.
And if you can't, and they're saying, well, my guy said they may. I'm like, yeah. Remember, as a kid, my kids would say, hey, ask my mom. They ask their mom, hey, can I go outside? Can I do this? Well, maybe that meant no, right? So in this world, we don't know what that means. So in 4 months from now, you could be all happy, and then you go in there and they say, oh, sorry, you got to bring it all in. And if you can't, you have to do a modification. And if they're not going to do that, then all of a sudden you got to notice a default, and then you got to get all that money. And if you don't, then you lose your house.
Yeah.
So
I noticed, the last, I think, 3 days, my credit union that I bank with, their website's been all wonky. You can't sign in. You can't call them on the phone, because everybody's trying to connect with the bank. You can't go into the banks anymore. It's all drive through, and so people are starting to panic, and they're like, "Well, how can I get my money? How can I do this? How can I do that?" And I think there's a lot of uncertainty. But when you can't physically go into a bank and ask somebody about lending or some type of loan, I think that creates even more panic.
I had somebody I'm in North California, in Southern California, use one of my debit cards, right, for my business at a wing, Wild Wings or whatever. I'm not in Buena Park. So it took me 3 hours on hold to get to somebody at the bank to get a new debit card, to get this, because they say go online and just order it, put it on hold, order a new one, and say the reason. Well, the reason isn't somebody did a fraud charge on my card. It's I lost my card or it was stolen, right? That's not the reason. So I finally get in there and they took care of it, but that's the issue. And they're saying fraud is huge right now on your cards because it's so hard, like you just said, to get into a bank or talk to somebody about it. Because I mean, even people applying for the PPP with some of these big banks, their sites were crashing because so many people. There was one lender, let's go back to forbearance. In one day, they had over 8,000 calls for a forbearance, right? And not that I say it, and as I said, I have a radio show. I talked about this yesterday about how if you have to do it, do it. There's nothing you can do, right? If you're out of work, you don't have a job. But if you have a job and you're still working and you're getting paid, pay your mortgage,
Mhm.
because you're just hurting yourself in the future and the industry. Because the fear right now is a lot of the servicers don't want to buy certain types of loans and after they get funded for purchase or refinance, because this is okay. 2 weeks ago, nobody wanted VA loans and FHA loans. Ginnie Mae loans, as VA, basically, if you miss a payment, right, in the forbearance, that servicer still has to send that money to Ginnie Mae.
Mhm.
So if you got $1 billion in servicing on government loans, let's say VAs, then all of a sudden you got 300 million you got to write a check for. So nobody wanted to take on that, and we had major issues. They have since worked on that with Ginnie Mae, and Ginnie Mae is now not is taking care of that, right? They're forwarding that the other way. Well, our other problem right now is Fannie and Freddie. And that's the normal conventional loans everybody gets. It's having some other issues, servicing issues. All these forbearance is going to cause problems.
Well, a friend of mine was going to buy a 4-unit apartment complex, and he was, probably a week away from doing all this, and the bank says, "No, we can't give you the money." And he says, "Why?" He goes, "They said because right now there is a 90% chance you're not going to be able to pay us back because your tenants, will be out of jobs, so there's no income." And he says, "Well, yeah, but I have the money, I have the equity, I'm paying it off, you know." And they wouldn't do it. And so now he's got to start this process all over again. But banks aren't going to touch it because they see all these tenants don't have any money. They're defaulting on their rent, which then makes the mortgage holder, liable for all this.
Yeah, that you have to have 6 months reserves for each unit,
Yeah, and
and
that
then
kind of
and then they'll be able to do it. So and again, there's multiple players in this world. The first ones to stop everything are always the banks because they never want to take a risk. Then it goes down to the mortgage bankers and other stuff like that. And a lot of different mortgage bankers do a lot of wholesale, and each one is doing differently than the other ones. I have probably, I have a ton of investors, but basically, a bunch of them have changed. They won't even touch anything under 640 for government or 660 or 680 conventional. If you're under 700, now you need this reserves and your DTIs at this. But there's other players who still do it the old way because they know, hey, we've been around forever. We know this is going to be, soon. This is self-inflicted. This is not 2008. All of a sudden, the financial market fell apart and everything fell apart. All these mortgage-backed securities that were sold as A paper should have been sold as E paper. It's a totally different world. This is all, hey, we can stop this anytime they want to stop it, right? Basically, go to work. However, that going to work is not going to turn on the light switch. It's going to take months and stuff to come back before we start. A lot of people are worried. Hey, nobody's want to go to a restaurant. Nobody's want to go there. I'm going to tell you right now, I'm tired of being home. You know what I mean? I work from home. I'm essential business, so I could actually go to the office. My staff's at the office. I've set them up to work from home, but they want to work at the office. I think it's because they don't want to be home with their kids and their husband. So that's fine with me, right? But for me, my wife works for Kaiser, and she's out front overseeing all the people who are touching the patients, with temperatures and that kind of stuff to see where they're at. I'm like, I'm not going to bring that just in case. I'm not thinking I'm going to have it, but just in case, I'm not taking it to the office, and that's why I work from home now.
So how did you
And I'm
get started
tired of
with
it.
this?
I'm sorry?
How did you get started doing this?
Lending?
Yeah.
Oh, see, I grew up in Turlock, California. That's a small little town in the Central Valley. And I'm like, I got to get out of here. So I joined the Navy, said I'm going to see the world, got to see San Diego. Got stationed at Camp Pendleton, was there for almost my whole term.
Yeah, I
And
like San Diego.
Yeah, so did I. I was in North County. It was the best time of my life. And while I was in, I got my bachelor's and master's. And then I realized I didn't want to stay in patient care. Ended up being in physical therapy after I was a corpsman. I was an EMT. I did everything you could possibly do. Went to physical therapy so I'd never see a ship. And I was like, I'm tired of patient care. So my neighbor owned a mortgage company, and I was like, oh, what the heck? I like numbers. So I went to work for him, and that's how I got in the industry. And back then I was taking people from 13 to 9 on refinances, and they loved me. And today, if I give somebody a 3 and an 8, they ask, is that a good rate? It's a totally different world. So I've been doing this for 25 years. It's changed drastically in 25 years. I mean, I tell my staff that don't worry, it'll change tomorrow some way. And it does. It's constantly changing. I don't remember certain guidelines anymore like I used to. When I first would get into this, I'd read the manuals, every underwriting, any change, so I knew off the top of my head. Well, it changes drastically, constantly. And right now we're having changes by the hour or changes by the week at different places. And you just luckily it's all automated. So if we have a question, we put the information in and it comes back and this is what your rate is.
I remember my dad was telling me back in the early '70s when they had the gasoline shortage, in order to get a mortgage, it was like 12, 13%. And that was acceptable and people did it and they didn't care. And, but now people complain if they're paying more than 4%.
Yeah.
And anything lower than that, banks don't even want to deal with you because they're not making any money.
Right. It's going to take them forever to make money. And that's why a lot of these, they're a lot of servicers make it really hard to get a payoff. Mm-hmm. Right. They take time, a lot of time, hope so that you might not, they hope the rates go the opposite way much faster than they came down. Because when they come down slow, but when they go away real fast. And so, and I'm not going to name names, but some of these places take 3 weeks to fricking do that for a reason. Not only are they trying to keep you, but they want to stop the servicing flow because they pay to get that loan to begin with, and they want to keep it for 6 months and longer. They need 6 months of payments in order to make what they originally paid for that loan back.
Yeah, it's crazy. Now,
Yeah,
you had mentioned about your podcast, your show, and I think it's called Real Estate Jerky, which
correct.
is kind of different than your business name, which is what, living for lending or lending for living.
Lending for Living.
Yeah.
I can't even say it now. Now you messed me up. Lendingforliving.com is our website. Basically, it's so back in 2010 and 11, everybody was coming up with blogs, right? That was our big thing in our industry. Get a blog, start talking so you get to, and so I came up with the name Real Estate Jerky back then. We give you something to chew on. And I had it, worked it for about a year. And then you know how life is. Things change and you just get busy doing other things. You forget about it. 18 months ago, 19 months ago, I was approached to do a radio show in our town. Mm-hmm. We had a radio show on AM radio for many years. It was a local guy doing it. It was called like Central Valley Real Estate or something. And when I was approached, my first statement was, do people still listen to radio? Right? Because I listen to series, I listen to my iTunes, all that other stuff. I don't necessarily listen to the radio. And so I was shocked that on AM talk radio, there's a huge audience. I was surprised. So they're kind of coming up with the name, and I say, hey, I'm just going to throw this out there. It's not, I don't care if if you don't like it, and I'm not going to be offended by it. And I told them the name, and they were like, wow, we could do that. Smokehouse Studio. I mean, so if you listen to it, they played with it really well. And I'm surprised how many people listen to us. I mean, come on. You know how it is. It's like, yes, I have knowledge. I have that. But, why does somebody want to listen to me? But we don't just talk about real estate. We talk about stuff that's going on in the local community. We bring, we do have good shows like 1031 exchanges, right? Mm-hmm. I didn't realize on a 1031 exchange that if you have an investment property and you sell it, you can turn that into a second home somewhere, right? Mm-hmm. You can 1031 exchange that and buy a second home. The rule is, I think you cannot rent it for more than 14 days the first year, and you can't use it more than 14 days the first year. Second year is the same thing. Third year, it is now a second home. So you've just pushed all that gains into a second home.
Nice.
Yeah, because around here, what was happening is people would be selling their stuff in the Bay Area and wanting to buy a place in Tahoe, right? So they needed a lot of money to do that. And so they would do a 1031 exchange into that. And so
I'm amazed at the prices of homes on the West Coast compared to here in Pennsylvania, because I have a 6-bedroom house that it's about 5,000 square feet, and I paid $178,000 for it 17 years ago. Well, if it was the same house in California, it'd be like $6 million, and I'm like, yeah, right.
Speaking of Pennsylvania, my wife was born in Warren, Pennsylvania.
Oh, it's a couple hours away.
Yeah, it's just a small, same thing. It's just small town, small everything, and yeah, I live in Modesto. It's not real. And I have a 1,800 square foot house, 1950s, and it's probably worth 550, mm-hmm. right? So, but I mean, land was pretty cheap out here still. Like we bought 32 acres last summer for $137,000, which probably sounds like a lot from where you're from, but that's pretty cheap from where we're from. So
32 acres. I mean, that's a lot. Does it have, you can go fishing, or is it a pond or anything?
There is what they call a ditch through there, a Tuolumne County ditch, which is, they call it a ditch, but it's really like a stream, right? A big, I don't want to say river, but basically it was a man-made thing that they used for agriculture back then. So we have access to that on part of it. But I mean, it, the person who owned it had owned it since the 60s. He was paid by the forestry to do nothing with it,
Mm.
right? Do not, and so it is overgrown. It needs to be cleaned up. And we cleaned up the first, I say 6 acres of it where we're building on. And that's been nice, but there's so much work to be done out there. And it was the whole thing is my wife is in the medical field and she's like, when I'm done, I don't want to be around people.
Yeah.
I'm like, you couldn't have told me this 6 years ago when we could have got it a lot cheaper, right? Because we have a cabin up in Cold Springs. We have a place in Modesto. And I thought our goal was to pay both of these off and be done. No, our goal is to, build a 3,000 square foot home on this property and be in debt. That's our goal, I guess.
That's the American dream, right? Be in debt
Well,
till you're
I used to
dead.
make I used to make fun of people who got rid of their kids and then all of a sudden built a big ass house. Use my language there, big house, and 3,000 square foot when they have no kids anymore.
Yeah.
But I realized that when you get rid of your kids, you have a lot more money.
Yeah. One of the things that we want to do is get an RV and just take the summer or maybe 5 years and travel around the United States. And I mean, my oldest is 31, my youngest is 15. So there's still I got to wait till he's out of high school.
Yeah,
But I have grandkids now, and my oldest grandson is be 7 this year. My youngest was just born, and it's I don't mind paying the low rates that I have for my mortgage here, but it gives me some opportunity to see the sights and cruise America. And I think everybody needs to have some type of dream that that can fuel their passion to do something more after the career. But when you're paying the high mortgage rates for the rest of your life, it's kind of hard to do that.
right. And lucky right now, I mean, I've been taking a lot of people to 15 years, that were in a 30-year or 25, and some of them, it's not much more for
Yeah,
that 15-year because how the rates have dropped so much. And I mean, for some people, it's still expensive, 400 to 500 bucks a month, but they look at, I got 15 more years and
yeah,
I'm done working. Well, let's get rid of this mortgage so I have opportunities. And I try to tell everybody before you do that, are you staying where you are? Because
right.
if you're not, go buy that retirement home now, rent it out,
Hmm.
have it as a second home and VRBO it or whatever. And then that way, when you're done, you sell this house that and then pays that one off. Because a lot of people wait. All right, we're done. They sell this house and then they go buy that other house, and it's more expensive than it was they could have done 6 or 10 years ago.
Yeah,
So find out, and that's my first statement. I ask people, "What do you plan on doing? Where are you going? Where are you? It's not just, and that's why it's important to whoever you work with know what's going on with you and ask you questions. If they don't ask you any questions, move on. They're not there for you.
now,
You
do
know.
you only service loans in California, or do you service them everywhere?
No, I only focus in California because we're so busy here that I used to be approved in multiple states, but then it just got to a point where I do. So before the rates drop where they are, I was 95% purchase. I'd only
Oh,
refinance past clients and referrals. Now we're at, because the purchase market's kind of dried up because, people are unsure. We're probably the opposite right now. We're or I should say 90% refinance and 10% purchases because smart people are still buying
mhm.
because they know that they get a better deal right now,
Right.
right? You buy when people, you do what people don't want to do. So if, when people are selling, you don't buy, that whole thing. You buy when people want to get out. So the last time we had a downturn, the smart people bought in 2008 when everybody else was thinking, no, I don't want to buy, and those people bought at the bottom. So
Yeah. I mean, this is, I think, the first year that I've had extra money to play with. And when the stocks tanked a couple weeks ago, I went in and bought a whole bunch of stock. And within 2 weeks, they all improved to the point where, I'm making, a huge return. But, the people with a lot more money than me are buying properties, and they'll just hold them for a while and then flip them later.
and also, I had a guy on my show a couple weeks ago, and he was talking about the biggest problem we're going to see right now is this is a huge opportunity for people. and it's going to make the middle class even smaller, right? That's the issue. This middle class is going to get shrunk because of the fact that people who with money right now, they're doing just like you did. They're
Mhm.
buying stocks big time because they know this is a short period of time. And yes, some people are going to get hurt and some people are going to make a lot of money, but you don't chase, like, you don't buy Zoom now, right? I mean, because you buy that before the downturn. You don't buy it now when everybody else is, and it's so valuable. But what next? And I talked to him and I was like, do you, ABCs, alcohol, tobacco, the stuff that are up.
Yeah.
But it's amazing how much alcohol sales are going off right now.
Well, in Pennsylvania, all the our state controls the sale of alcohol. We have our own wine and spirit stores, and they're all shut down.
Oh,
So
really?
you can buy, 6 packs of beer and an occasional bottle at the grocery store, but they limit, how much you can purchase. And they don't always have, the harder stuff. They usually just have wine and beer, but the other stuff, the whiskeys and the rums are all controlled by the state. So, if you're an alcoholic right now in this crisis in Pennsylvania, you're screwed. Because you ain't getting nothing.
You
So
just
I
drive
mean,
to the next. Do you have to drive to the next state or something?
well, you can. The problem is that Maryland, which is the next state over or down, they have police at the borders.
Oh,
So
really?
and they consider that if you buy your alcohol across state, you're now bootlegging it, and you're going to get fined, which is stupid. I think they
Yeah.
just need to open things up and get the economy going. And this is having a trickle down effect everywhere. So people getting laid off, they can't pay their rent, they can't pay their mortgage. Then the people that you know are paying the mortgage, you can't pay the bank. The banks are going, well, what are we gonna do? We're gonna get shut down. And I think we just need to, like you said, pay everything.
Yeah, pay what you can. If you
Yeah.
can pay, pay. If you can't, don't. And we've been, because my wife's working 12-hour days at the hospital and stuff. Like, she'll get home and she doesn't always want my cooking because I don't cook well. So we've been ordering out and picking up, and I tip extra. You know what I mean, right now, because those people are not getting a lot of money. So it's like I give more because I know that I have it right now. So why not give it? I mean, I don't know if I said, but we've had the best quarter in history this year. April is going to be huge, but I don't know where May, June, July is going to be after this, downturn,
Yeah.
because people might, they're, even if we turn on the switch, there's still going to be more people laid off. As you drive down the road, you look at the stores that are closed and you go, okay, that one won't be back. That one won't be back. I mean, you'll get like Cheesecake Factory. The first week that they had to shut down, they were sending notices, we're not going to be back here. We're not going to be
Yeah.
leasing this space anymore. We're done.
And,
So,
and I'm 51 years old, and we're probably similar in age, but it took me a long time. And my first business back in 1998, I was like 15 minutes away from bankruptcy. Then I started learning marketing, but if it wasn't for that, I wouldn't have started putting money away in reserves. And I had probably 3 months of reserves going into 2008, and then the economy crashed. And then I said, well, I need to have more than 3 months. And then I started building up to 6 months, and then 12 months. I mean, I have like 18 months of reserves, and I like to build that up to 24 months. And we were going strong into this economy, and no, we are doing really well. And April, going into April, we're probably 30% off of what our true numbers should be. We did lose a client or two, but we can still make it. I mean, we still have enough money coming in to pay our bills and do this and do that. But there are so many people out there that don't even have $500 in their bank account as a reserve.
I mean, most people live paycheck to paycheck. That's how
Yeah,
it is.
yeah, and
And even
they're
people who make a lot of money live paycheck to paycheck because they buy
yeah,
bigger stuff and more expensive stuff. Right.
yeah, and those are going to be the ones that are going to have a hard time getting probably these new mortgages that are coming out because the banks don't want to take the risk anymore.
Well, see, this is unusual, right? This is no one planned for this, right? This all of a sudden there's a pandemic, right? And I don't want to say we overreacted or under. I don't know yet. We'll know later. I'm sure somebody's going to have some commission brought up to figure out how bad we reacted to this, and we'll just say we. Um, you just never know. I mean, this is because we were like, wow, this is going to be 2020 is going to be amazing for the real estate
Yeah.
industry because I don't know how it is in Pennsylvania, but we have not built enough homes here
Yeah.
at all. We still haven't. I mean, and so that's the only saving grace right now is the people who are getting the forbearance. They're not going to leave their house. They'll figure something out. They'll stay. And a lot of so there's still going to be the fact that we don't have enough homes, right?
Mhm.
When we come out of this. So we're going to see that market's going to continue to grow and appreciate. We might take a little dip down, while people are doing, but it's going to go right back up because there's just still not enough homes,
Yeah.
and
Here
and
in
interest rates are
here
so
here
low.
the realtors were making bank because they would never have to really work. As soon as they put a house on the market, a day or two later, it's under agreement, and they're like, "Wow, this is the easiest money ever." But it's
And that's why the fintech firms were going, and fin real estate were going, hey, we're going to do this now
yeah,
because they can just put it. We can do the same thing.
yeah,
So
it's crazy. But where do you? I know that you don't like to make nobody likes to make predictions, but what do people do now? I mean, where do they go? Where do they what do they just wait it out
you mean where do they go for what? For get a loan or what?
for get a loan to
Well, and I'm not going to knock any banks, but don't go to your bank. That's your first thing you should always.
don't go to my
They,
bank.
they, yeah. I mean, they're inundated by other things, forbearance agreements. They can't do the PPP program. I mean, I know one bank had 345,000 people in a couple of days apply for the PPP. There's no way that they ever were going to get through those amount of people. It's just unphysically. Figure the numbers, right? There's only 24 hours in a day and they only have so many staff. There's just no way. So if you applied there, you should have went to like PayPal or some other place, which is fintech once they were because they're getting it done.
Yeah,
Now I hear they're out of money, but that's so. If you're loans right now that are still going and easy to do are conventional loans, all day long refinances. So if you are in that world, which is the Fannie and Freddie, which is normal, right? You got a good FICO score, and when I mean good, if you got a 680 and above, conventional is where it's at. If you have less than that, you have to go FHA, VA, or USDA.
yeah,
So those programs, they're still there. If you want to buy a home, you need to buy a home. Go talk to somebody. And it's. I'm not saying to stop because I'm telling a lot of my clients that want to refinance. We run the numbers. If it makes sense, we're doing it now. If it doesn't make sense, let's just hold for a few more months and see where it's at in a few more months. I
yeah,
mean, because we hear stuff all the time saying, okay, we're thinking by the end of the year that the 30-year fixed rate's going to be 2.5 and the 15 years going to be 2.
mhm,
Well, that's only a half lower than we are right now.
yeah.
Right.
And,
And I'm
and
talking about Fannie puts out there, Fannie and Freddie puts those numbers out there because legally I can't quote an interest rate unless they do an APR.
yeah.
But if you go off of what Fannie and Freddie put out there, I think they put out there that their fixed rates on a 30-year was 3.3. Right.
Wow. And my current mortgage is like 5.5. And I've kept it that way because, I thought, I'm doing the numbers on is it viable for me to even refinance? I mean, until it drops down to 2, I mean,
Yeah, but if you look at whatever you're paying on it, I'm sure you're on a 30-year, right? So I look at so when someone's on a 30-year, I look at amortization schedule, where they're at, what they've paid it for interest so far, and what they have left. Then I run a 15-year same thing and say, look, you can still save X amount of interest if you go to a 15-year and your payment really either stays the same or goes down.
mhm,
Sometimes if you're newer, like you've only had your loan for 5 years, your payment goes up by $400 or $500.
yeah.
So it just depends. I mean, on your dollar amount, let's just say that I don't know what you owe, but I had a client call me and they're like, we have a 6.25 on $114,000 loan, right?
Mhm.
Well, truly, even if I drop it 2%, they save, you know, $40 a month, right? So
Yeah.
for you and I, that might not be enough. For some people on a fixed income, that's a huge savings,
Yeah.
right? If they're older. Their problem was they want to go from their 15-year loan they have now back to a 30 because things have changed in their life. They know
Yeah.
they'll never pay it off.
Yeah. They'll be
And
dead long before that.
right. But I mean, I've had people where their payment doesn't change, but I save them $35,000 in interest over the next 10 years. So it just depends on where you are. The only way to know, I say, why I like my industry, numbers don't lie, people do.
Yeah.
Right. So I run the numbers, we look at them, and it makes sense. It makes sense. And that's what you need. You need somebody like me in wherever you are. I mean, and I'm an independent mortgage broker, and there's a ton of us out there through. And if you need to find one, go to AIM or find me a broker.com. And those are the people who we do it really inexpensive. We don't make our whatever rate we put you in, right? Now it's just we make the same percentage. Did I freeze because my internet connection saying unstable? Or they're
Oh,
just saying I'm unstable is what they're telling me. So
yeah, I think we're all unstable a little bit.
so basically we don't make it off the rate. We make it off of the loan amount size. So we all have, and this is everywhere, it's a percentage we make set up already that you don't pay.
Yeah.
So
So how do people get a hold of you, and where do they go? I mean, we mentioned your lending for living and your real estate jerky, but how do they find all that?
all right. So if you just go to lendingforaliving.com, they can find me there, or they can go realestatejerky.com and they can find me there. Or like on our radio show, we tell people from your phone, you hit pound 250, say the key phrase real estate jerky, and you'll get right into me. It's actually works pretty well. I don't know if you guys have that there, but that's
I
pretty
have a
good.
phone, but I rarely ever text anymore. I guess I'm just an old school guy that hates texting.
You know what? I sold by the phone for so long that I prefer to talk to people.
Yeah.
I can hear the tones and inflections in someone's voice to know if I'm upsetting them or if they're upset to begin with, right? And that's the biggest problem we have these days is people in a lot of the industries are young. They text, they never leave phone, they don't leave voicemail, they don't any of that stuff. They call and then they never leave a voicemail. Well, did you call me or did you sit on your phone?
Yeah.
You never know that. So I'm real big on I have to speak with you.
Yeah.
Yes, I'll text little stuff because some areas in my that I work, they have really horrible service still and they want the text. But for most people, I want to talk to you. I
Yeah.
had a lady who when I talked to her, I could hear it the moment she picked up the phone. She wasn't upset with me. She's been at home for 3 weeks with her kids. And her first thing she said was, I am not a school teacher. Right. She was a chef. And so no matter what I said or no matter what I did, she wasn't going to like it, period, because she was not in that frame of mind. So
Yeah.
as you say, you don't like texting. I don't like texting. I want to talk to people. But, if they could always get a hold of me. I mean, if you Google my name, Ed Parcaut, I come up pretty much everywhere. They can call me 209-404-1915, 404-1915. And if you need, if somebody that needs help, I can help them get to where it is because I don't do everything, nor
Mhm.
should most people. I do what I'm good at. I'm a vet. I do a lot of VA loans because I like helping vets. There's other people in our industry that and from what we're in with Steve Sims and stuff like that that do VA loans also in the Midwest, and
Mhm.
so we can find the right people for whoever is listening to this.
Yeah. And my son's probably gonna give you a call because he's an army guy stationed at Bliss right now in Texas, but he wants to move. So he's
And
gonna.
with a lot of vets, what they don't realize when they get out of the service, they need to put in for all their disability stuff they can get. Like when I got out of the service, we went through DAV, Disabled American Vets. They sat down with you, we went through your medical record, filled out all this stuff, and sent it in so you could get a disability, whatever. I got 10% disabled, which didn't mean much. I get a little check, but basically, yeah, basically what that meant was when Clinton was in, he had passed a law that if you put in so many complaints or so many issues, you automatically got 10%. But what that means for vet is they don't have to pay their funding fee. I know in the state of California, my kids got to go to school for free through the state schools and the universities. All I had to do was pay for their books.
Mm.
So it's huge. And so vets need to, when they get out or getting out, put in for it to get that type of disability so that their kids are taken care of. Yes, they have a great GI Bill right now, but this is extra for that. You
Mhm.
follow me? So yeah, yeah.
Yeah.
So all vets definitely need to. And if anybody has questions about any of that stuff, they can give me a call or find me or email me and I
And
will
see,
take
this
care of them.
is this is this what that makes Ed a true American e-hero because he spent time in the service, and now he's helping people all over California, pretty much all over the world now with his podcast, with their financing when it comes to mortgages, and I think that's awesome. So if you're
Well,
listening, all the audience, if you're out there listening, please pay Ed a visit to his podcast, listen to him, and tell him I said hi. So until next time, I'll see you guys later.